Philip Strebel in the pits of the CME Group. Yu-Dee Chang has been buying during the market pullback, so he's all geeked up, at least from yesterday and the previous couple of sessions. He's going to tell us what he's doing when the market rallies on a day like today. But let's start with Philip Strebel at the CME. And looking at the price action today, David and I were talking about this, and we had Klaus Kleinfeld of Alcoa. One single stock truly helped move this market, helped buoy it higher today, didn't it?
Absolutely, it did. I mean, when I went home last night, I was really kind of a little queasy there looking at it. I thought the market might get that continuation down, but once we saw Alcoa come out towards the end of the day, when I woke up this morning, I saw that nice boost, a little bit of follow-through. The only thing I'm concerned about is that 50-day moving average on the S&P, 1372. We got to get above that to start getting things going again and get some momentum back to the upside.
All right, let's bring in Yu-Dee Chang, chief trader at ACE Investment Strategies. Now, Yu-Dee, you think that we're only halfway through this sell-off. You think it's going to go from 4% down to about 8%, but you still say it is a buying opportunity. If you think it's going down another 4%, why buy now?
You know, it's kind of interesting. I think the pictures haven't changed. The bigger picture hasn't changed, and the smaller picture hasn't changed. The bigger picture is that this risk trade concept with the federal put is still there. That's why I still like buying this market. But on the shorter term basis, no doubt, the market was overdone. We're in this March, April, seasonally weaker period. Market volatility was low, and sure enough, it got a little tired on excuses from last Tuesday from the Fed, actually, and weakness of the of news from China, from Europe, from the United States. Triggers rally. You know, the funny thing is, the market started rallying back in March of 2009, okay? Over the past 37 months, we had drops in the market, average 11 times, about 8.5%. That's why we believe there's probably another 4% to go. And I want to buy it, dollar cost averaging, buy it on the way down.
Okay, all right, okay, I'm sorry. Let me clarify. Don't dollar cost average or dollar cost average?
No, I think I do want a dollar cost average.
Okay, just wanted to clarify that. Okay, so Philip, you know, I was with you. I walked out of here off the set and thought, well, Alcoa really beat. That was amazing. But does a single multinational, granted very big stock, really able to pull the market out of what seemed to be a real depression yesterday? And sure enough, it happened. So what happens tomorrow, absent of any other news, good or bad?
Well, I still think that 1372 is that key level. We get back above that, you're going to start seeing some of these guys that were short start to come in, start to recover their positions. Maybe some people go mildly long with stops below that hook low that we've seen trying to pick a bottom. I mean, the bull trend, it's there, it's in place. A lot of people are skeptical about it, but I think that U.S. stocks are a place to be. I still think there's a lot of problems over in Europe. Some of the other assets aren't as great yet. I think that the place to be is still on the stock market to the upside for the moment.
All right, Yu-Dee, you teased us a little. You suggested that we do buy in, even though you think the market's going to drop into stocks that are well positioned to take advantage of the global opportunity. Procter & Gamble is one, and McDonald's is another. Why do you like these two stocks right now?
Well, a couple of things. First of all, they are the multinational conglomerates and with footprint, especially in the emerging market. That's why I like them. And also the fact that they have good credit ratings. So believe it or not, they actually have been borrowing at a very, very low cost. And hopefully they could take all these cheaper money, that is, and use it to use on their so-called global footprint, especially in the emerging market. That's why I still like these stocks. Plus the fact that their dividend growth rate has been spectacular, with about a 3 to 4% dividend paying. So that's why I still like these stocks a lot. McDonald's, Procter & Gamble, especially dollar cost average, one more time, on the way, buying them on the way down.
Buying on the way down. Philip, when you're watching the money, and the money flows on the floor of the New York, the CME Group where you are, what are you seeing lately? Does anything jump out of the ordinary at you lately?
Well, I mean, that's really a broad question. I mean, we saw a lot of action in the grain markets back yesterday with the USDA crop report. We saw a lot of action in the oil market after, today's unexpected drawdown in the RBOB. Gold is still presenting an opportunity there. It's a question of, is it going to be that asset that everyone flies into if things start to fall apart in Europe? So there's a lot of things that are, they're right there on the table. I think we're going to go in a direction in something. It's just going to be what's the catalyst to take it off to the upside.
All right, Phil, we're going to see more of you when the CME closes. And again, our thanks to Yu-Dee Chang. He is chief trader at ACE Investment Strategies. Thanks, guys.
What do